Hey, what's up, you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I want to show you exactly how to calculate your risk to reward ratio when it comes to trading Forex, which is the most important part of trading after psychology, which is risk management and money management. And there are so many ways to do that. I don't want to, touch on every single way that how you can possibly do it and be as accurate as possible. So let's get into one example right now. So this is a trade that I took on Friday, and today's Saturday, by the way, and it was a profitable trade on gold, which was absolutely crazy on my FDMO account. And I have a video for that. I broke it down how I took it. If you're interested in learning this strategy, I highly recommend you to watch my other videos as I break down every single trade I take. Even if I don't take them and I see them, I record a video and I break it down what would have happened if you enter this trade and why exactly. With the simplest way. There's no indicator, nothing involved at all. I'm going to put a card above this video which you can watch the video later and then enjoy it. If you have any question, drop your comment below this video. So let's say that on Friday in gold, I wanted to enter the trade right after the break of this previous candle, which is this bullish candle. So I wanted to take this move and I wanted to have my entry right here. This is exactly where I took it, and this is exactly where I wanted to be. And my stop loss above this zone and my TP right here. Okay, but the thing is that when it comes to opening your position, how would you know that you're risking a proper percentage? So let's say that you want to risk 2%, you want to risk 1.5%, and you don't want to go actually beyond that. You don't want to exceed 2% risk because this is not something that you're more comfortable with, or you're trading on FDM or whatever reason. So how would you calculate it, guys? What is Pip, guys? So the first thing you need to understand is the lot sizes and pips. So I'm going to show you an example right here. So this is the example that I actually prepared for you, which is very simple. I don't want to overcomplicate it because I want to show you what the concept is. We are not doing math here, so we are not wasting our time. So look at this, guys. Each pip means each move in different pairs. And for example, let's say that gold is trying to go up from 1830.749 to 1830 to 1819. 1830 to 1819. The difference between these two numbers is the number of pips, or yeah, this is actually what people call it. There was another name for that which I'm not going to mention it, but the difference between this number that I'm pointing right here and this number, which is above or below this number, doesn't matter. The difference is the number of pip, and for each pair is totally different, and you need to know how to calculate it. So for example, money wise, for each 0.01 lot size that you open, you're risking 10 cents. So it means that if the price of that pair goes up or down by 1 pip, you're risking 10 cents if you have a position that is 0.01, and 0.1 is $1. So it means that when you have a position which is 0.1, for each pip that it goes up, you're risking $1. So let's say that you open a position right here, and then your position is 5 pips in profit, and you have a position for 0.1. So it means 1, 2, 3, 4, 5. $5 in profit, because your current position is $5, 5 pips in profit, and each pip is $1 because your position is 0.1. And it actually goes down like this. One standard lot size is $10. So $10 means that for each pip you're $10 in profit or in loss regarding your balance. So you need to calculate it yourself, how it's going to work out for you, and how you need to prevent a big loss. And I hope that you know that. So it just goes down like this. It's super easy, and the risk to reward is the same as RR, which a lot of people talk about, means risk to reward. So for example, when you have a trade with a risk to reward of 1 to 1, it means that for every $100, for example, that you're risking, your reward is also $100, which is very, very self-explanatory. If your risk reward is 1 to 3, it means that if you're risking $100, your reward is $300. Okay, but how do you calculate that? Exactly what I told you right now. And the best tool to see what your risk to reward ratio is TradingView. Nothing is better than this, guys. It's super simple. You don't have to fully learn how to do it and calculate it, put it on a paper, go on a different website to see what they give you. You don't have to do that. Literally come here, know where you want to open your position, and know where your TP and your stop loss are gonna be, and then it shows you that what your risk to reward ratio is. Look at this, guys. Look at my cursor. Risk to reward ratio is 1.94. So if I bring it down a little bit, you see that risk to reward ratio 2. So it means it's 1 to 2. For every $100 that I risk right here, after entering my position, and my stop loss is here. So if the amount that I'm risking here is $100, my profit here is going to be $200 because of the risk to reward ratio, which is 1 to 2. And that's how simple it is. So this is how you identify what your risk to reward ratio is. And then after that, you can easily get into the process of measuring your stop loss peep and see how much you're actually risking. So there are 2 ways for that, guys. 3 ways. The first way is to do it traditionally. So it means that you do it manually, you know this rule, how it works, and by the way, every pair is different, the calculations are different, and you just basically come here, you say, okay, I want to enter a position here, I'm going to use my measure, and then I'm going to take it from the entry points to the stop loss to see, okay, so it's 224 pips. So 224 pips, what's my lot size? Here 0.1. okay, so 0.1 is $1 and it's 227 pips. So it means that for every 0.1 that I take, and my stop loss is 227, so it means that I'm risking $227. Okay, but as I said, it might be a few dollars, you know, less or more, but it's different for every pair, and you need to do other calculation as well. But this is actually the basics of it, and I used to do it and it wasn't always super accurate, but I was always looking for something that give me the exact number, especially when it comes to FDMO. They're pretty strict on the drawdown rules, and I don't want to mess up with that. So this is the first way you do. You just use the measure, you just calculate your a stop loss amount, that how many pips is away from the entry, and then you come and calculate it yourself. The second way is to use a website called forextime.com /trading-tools/trading-calculator/pip-calculator, and then it actually takes you to this page. Or you can search it on Google, FXTM Pip Calculator. You come here, you say, okay, pip amount 227, currency pair, you bring it down to gold, trade lot size is 0.1, and USD is, for example, GBP. See that for gold, 1 pip is actually way this, because of the spread and because of the instrument itself. 0.1 for gold is way different than 0.1 in GBPUSD or EURUSD. Look at this. I showed you how to calculate this, but the amount that this website is showing us is way higher for 227 pips. But if it was 27 pips, then it was $135. Now it's 227. So $1,135 for 0.1 for gold, and the deposit currency is USD. But if you're a scalper, guys, so this is for gold. Let me show you how much of a difference it is, how much of a difference it has between, for example, gold and EURUSD or GBPUSD. So let me take it to EURUSD. You see, it's only $14. And if I take it to something else like GBP New Zealand, it's $177, which is 1/10 of what it used to be on gold, which is absolutely crazy. It's a good way, it's just time consuming. I used to do that and it was losing half of my entries because I'm a scalper. I take a sniper entries and I want to be as fast as possible. But this is the second way that you can calculate your risk reward ratio and eventually your lot size to see what the best thing is for you based on all the calculations. So you come down, you say you grab your measure, boom boom, pips, how many, and go to the website, find the pair, put in the stop loss amounts, and then your deposit currency, and then it gives you what lot size you need to use. And by the way, it's not only that. What if you want to risk 2% of your balance and you don't want to calculate it to see, okay, what 2% is? Because if you go to this website, it just asks for the trade size. You can't tell this website, okay, I want to risk 2%, what's the lot size? No, you need to have the lot size ready for this website in order to get the profit or the loss amount that you're looking for. But the third way is a very innovative way that you can risk your calculate your risk reward ratio in the best way and in less than 1 second. I'm going to show you how, guys. This is my demo account, and I'm using a bot called Profit Mastery Incubator, which is an EA, but it's not automated. It's for manual traders. And when you go to this section, so by the way, you just can put it here. I know I'm going to show you how to install it on your account by putting up a video above this video. Go watch this video after this. It's super easy, and then you drag it and drop it here, and then after that you open this tab right here. So you have about, common, inputs. This is what we deal with. So when you are in this page, you have some parameters, and the only thing I deal with is the percentage of risk relative to equity percentage, and I activate this automatic lot. So because I want this EA to calculate my balance and then show me exactly what 2% looks like. I don't do anything. So let's say I want to enter my trade, and today I decided to risk 1.5% on this trade. So I activate my automatic lot, I put 1.5, which is 1.5%, I press OK, and then let's say that I want to take my sell position right here. So let me just bring it here. I want to take my sell position here and put my stop loss here and my TP here. Boom, sell. I bring this one down. My white line is my entry point, which is below this previous candle right here, and my stop loss is here. Look at this, guys, how beautiful it is, that it literally gives me the lot size, which is 0.18, and look at my stop loss, guys, it's $20, which is 1.5% of my account. And by the way, this is a $1,000 account, 1,000 pound account. It's a demo account, and it's actually showing me 1.5% of it. And if I keep moving this stop loss, you see that the amount is the same, and the only thing that keeps changing is the lot size. So it's very, very cool, guys. You don't have to go to any website to see what lot size you need to use, or you don't have to measure anything yourself. You just need to tell it, okay, 1.5%, 2%, 3%, and then press OK, and you see that it gives you this number here based on your risk percentage, and then you can specify your entry, your TP, and then press OK. And then it actually opens your buy stop, sell stop, buy limit, or sell limit. But since the market is closed right now, it didn't open any position for me. Otherwise it would have opened this sell position, sell stop position, and then my stop loss here, my TP right here. I have so many videos for that, guys. Go check it out. That's the easiest way to calculate your risk reward ratio. But if you have any question, guys, drop your comment here. And before you go, let me show you the results of Goldie Incubator on 2 of our $3,000 accounts, and one of them we are up 130% in profit on a $4,000 account, which we deposited later, and the profit is $1,282. And this is the other one, which we are up 43% since April 15th all the way to May 20th, which is $721 in profit with 2 drawdowns, but we actually could recover it and then close the day in profit. So if you have any question, you know what to do. Drop your comment below this video. I personally get back to you and answer all of your questions. Thanks for watching this video, and see you on the other side.